My greetings to everyone. I am Professor Dr. Namita Rajput, Professor in Department of Commerce, Sri Aurobindo College, University of Delhi. We are here with the ongoing series of Finance for Everyone, and today we are talking about Postal Life Insurance. Protect the ones you love with the oldest and the most trusted life insurance schemes in India. So, Postal Life Insurance is a government-run life insurance scheme that has been providing financial security to Indian government employees for over a century. So let us talk about the history of Postal Life Insurance, India Post. The concept of Postal Life Insurance was first floated in the year 1884. In 1884, PLI schemes was for the employees of the post office only. Then in 1888, the schemes expanded its scope and covered the employees of the telegraph department. In 1894, female employees in the postal and telegraph department were covered, and initially the covered was up to rupees 4,000 INR, which is now increased to almost about 50 lakhs. Who can buy the PLI insurance plans? So, eligibility criteria. The central and the state government employees, the joint venture having a minimum of 10% government PSU stake, officers and staff of the defense services and parliamentary forces. So this was about the central and the state government. We have banks and others also, in which the eligibility criteria stands by the nationalized banks, local bodies, autonomous bodies, and the credit cooperative societies. Whereas when you talk about the educational institutes, the eligibility criteria stands by the central and the state public undertaking universities, government-aided educational institutes. So, India Post carefully crafted the insurance protection through Postal Life Insurance. Let us talk about the features of the same. There are 6 types of insurance plans. All the plans are traditional plans with the guaranteed benefits. The premiums are very, very low and essentially affordable. Attractive rate of bonus with enhanced the plan benefits are there, and the group of insurance policy for the departmental employees of the Department of the Post. Let us now talk about the benefits of this. The first and the foremost benefit of PLI is outstanding returns, that is the added bonus, the loan availability, the conversion of the policy. There are appointment of a nominee or change during the tenure, about the revival of the policy, multiple PLI policies, income tax benefits, and the issue of duplicate policy document. So let us talk about this and the different products, what they are offering, that is the types of policies. The first is the Whole Life Assurance Suraksha, the Endowment Assurance Santosh, Anticipated Endowment Assurance, and the Convertible Whole Life Insurance Suvidha. Then we have the Children Life, that is Bal Jeevan Bima, and the Joint Life Assurance, that is the Yugal Suraksha. So these are the different products which are offered by PLI. So let us talk about these products one by one. The first is Whole Life Assurance Plan, that is Suraksha. Suraksha is a whole life insurance policy offered by PLI which runs till 80 years of age, and the policy promises a death benefit in case of a death during the policy tenure as well as a maturity benefit if the plan matures. The Whole Life Assurance Plan Suraksha. Let us talk about now the features of this particular scheme. You can avail a loan under the plan after the first 4 policy years are over, and you can also surrender the plan if you want after the plan has completed 3 years. The plan is a participating plan where the bonuses are declared. The sum assured and the assured bonus is paid either on the death or on maturity. The premiums are payable only up to 55, 58 or 60 years of age. There is a Whole Life Assurance Plan Suraksha. There are few eligibility parameters. The entry age for the whole life assurance plan, that is Suraksha, is from 19 to 55 years. The maturity age is 80 years. The sum assured is between INR 20,000 to INR 50 lakhs. The policy term is 80 age at the entry. The annual sample premiums payable for the policy at different combinations of age and premium payment term, if the sum assured is almost like 10 lakhs INR. What is the age of the insured, and if the premium is paid for up to 55 years, and if the premium is paid up to 60 years. So let us talk about the first parameter, that is 30 years. So in case of 30 years, the premium is paid up to rupees 55 years is about 24,950 rupees, whereas if the premium is paid up to 60 years is INR 22,550. When you talk about the 40 years, the rupees is 41,150, whereas if the premium is paid up to rupees 60 years, it is about 36,950. When it is 50 years, the premium is paid up to 55 years is rupees 1,35,360, whereas if the premium is paid for up to 60 years, it is about 76,610. Now let us move on to the next policy, that is Endowment Assurance Plan Santosh. This is an endowment assurance plan where either a death benefit or a maturity benefit is paid. The salient features of the plan are as follows. The first is the policy can be surrendered after the completion of 3 years. You can get a policy loan after first 3 of policy years. The sum assured and the vested bonus is paid on the death or maturity. The attractive rates of bonus are declared under the plan. Let us now discuss about the eligibility parameters of Endowment Assurance Plan Santosh. The entry age is 19 to 55 years. The maturity age is 35 to 60 years. The sum assured is INR 20,000 to INR 50 lakhs, and the policy term is from 5 to 41 years of age. Now this Endowment Assurance Plan Santosh, the annual sample premium payable for the policy at different combinations of age and the term, if the sum assured is INR 5 lakhs. In case of the age of the insured, it is 20 years. In case of the term, which is 15 years, it is the INR 31,430, and if the term is 20 years, it is about 23,290 rupees. When the age of the insured is 30, the premium for 15 years is 32,600 rupees, and in case of term of 20 years, the premium is 23,290. In case the age of the insured is 40 years and above, the term of 15 years, you have to pay a premium of 32,600 rupees, whereas in case of the term of the 20 years, the amount of the premium is 24,450. Then we have Convertible Whole Life Assurance Plan Suvidha. Suvidha is a whole life insurance plan which allows you the facility of conversion. You can convert the plan to an endowment assurance plan if you want. The features of the policy are as follows. The first and the foremost feature is conversion option can be exercised after the first 5 years have been completed, and the plan is offered as a participating plan which earns a bonus, and the loans are available after the first 4 years, and you can even surrender the plan if the first 3 years have been completed. Let us now talk about the Convertible Whole Life Assurance Plan Suvidha eligibility parameters. In case of Convertible Whole Life Assurance Plan Suvidha, the entry age is 19 to 50 years. The maturity ages for whole life cover 60 years, and if the conversion option is selected, then it is 50, 55 or 58 years. The sum assured is between 20,000 to 50 lakh rupees. And in case of a policy term, if a conversion option is not selected, 10 to 41 years, and if the conversion option is selected, 5 years to 39 years. The convertible whole life assurance plan Suvidha, the annual sample premium payable for the policy if the conversion option is exercised and not exercised. The sum assured is assumed to be INR 5 lakhs. In case the age of assured is 20 years, then if the conversion option is not selected and the plan matures at 60 years of age, it is about 700 rupees, and in case of the other option, that is the maturity age is 50 years and above, the premium is about 1500 rupees. In case of 30, if the conversion option is not selected, then it is 1000 rupees, and in case it is selected, then INR 2500. In case of the age of the assured is 40 years, and if the conversion option is not selected and the plan matures at 60 years of age, it is about 1600 rupees, and in case if the conversion option is selected and the plan matures as 50 years of age, the premium is about 7700. Then we have another good policy called Anticipated Endowment Assurance Plan, Sumangal. This is an anticipated endowment assurance plan, or simply a money back plan, which pays you income at a specified intervals. The salient features of the policy are as follows. The first is, in case of death, the full sum assured is paid irrespective of the money back benefits and you have previously received under the policy. The plan participates in profits and earns the bonus, and the survival benefits are paid 3 times during the term of the plan, and in case of 15 years of plan, the benefits are paid at the end of 6th, 9th and 12th policy year. In case of 20 years of plan, however, the benefits are paid at the end of 8th, 12th, 16 policy years, and 20% of the selected sum assured is paid as survival benefits. And when the plan matures, 40% of the sum assured and accrued bonuses are paid. So let us now talk about the Anticipated Endowment Assurance Plan Sumangal, the eligibility parameters. The entry age here is 19 to 45 years of age. The maturity age is 60 years. The sum assured is up to 50 lakh rupees, and the policy term is between 15 or 20 years. The Anticipated Endowment Assurance Plan Sumangal, the annual sample premium payable for the policy at different combination of age and the term if the sum assured is 5 lakh rupees. The age of the assured in case of 30 years and the term of the policy is 15 years, the premium is 3,300. In case the term is 20 years, the premium is 2,500. In case of the age of the insured is 40 years, the term 15 years, the INR premium is 3,400, whereas in case of 20 years, the premium is 2,700 rupees. Then we have a joint life assurance plan, Yugal Suraksha. Yugal Suraksha is a joint life plan which covers 2 individuals under the same plan. The features of Yugal Suraksha are as follows. The first is, the plan covers a married couple under the same plan on a joint life basis, and to buy the plan at least one of these spouses should be eligible to buy a Postal Life Insurance. The bonuses are declared under the policy, and the loans can be availed after the completion of 3 years, and the policy can be surrendered after the completion of first 3 policy years. If either of the covered spouses dies, the death benefit is paid, which is a sum assured and the vested bonus. The premium discount of INR 1 per INR 10,000 sum assured is allowed if you choose a coverage level of 40,000 rupees or above paid. Now moving on to the Joint Life Assurance Plan Yugal Suraksha eligibility parameters. Here the entry age is 21 to 45 years, the maturity age is 60 years, the sum assured is INR 20,000 to INR 50 lakhs and the policy term is from 5 to 20 years. The annual sample premium payable for the policy at different combination of age and the term of the sum assured is 10 lakh rupees. The equivalent age of the couple should be 25 years and the term, if it is 10 years, the premium is 9,300. If the term is 15 years, the premium is 6,000 rupees and in case of the 20 years policy, it is 4,200. In case of 30 years, the INR is 9,400. In case of 15 years, it is 6,000 and in case of 20 years, it is 4,300. In case of the equivalent age of the couple is 35 years, the premium for 10 years term is 9,400 followed by 15 years which is 6,100 and in case of 20 years, it is 4,400. Then moving on to a very interesting policy which is being offered, the Children Life Plan Bal Jeevan Bima. Bal Jeevan Bima, as the name suggests, is a child insurance plan which helps in creating a financial corpus for your child. The salient features of the plan is a child is insured under the plan and you can buy the plan to cover a maximum of 2 dependent children. The premium are waived if the parent dies during the term of the policy. So therefore, the sum assured and the accrued bonus is paid when the policy matures. The parent would be the policy holder of the plan who would also be responsible for paying the premiums. The parent should have a PLI policy to be eligible to buy this policy or his or her children. Now moving on to the eligibility parameters of child life plan, that is Bal Jeevan Bima. The entry age of the child should be from 5 to 20 years and the entry age of the parent up to 45 years. The sum assured, the minimum is 3 lakh rupees, the maximum is equal to the sum assured of the parent. Now moving on to the part bonus. The bonus offered under Postal Life Insurance. A Postal Life Insurance plans offers attractive bonus rates every financial year. The bonus rates are not fixed. They depend on the profit experience of the Postal Life Insurance during the financial year. However, for the past financial year, the bonus declared under the different plans of the Postal Life Insurance is as follows. In case of Suraksha, it is 85 rupees or per INR 1,000 sum assured. In case of Santosh, it is INR 58 with INR 1,000 sum assured, followed by Subidha, which is INR 85. In case of Sumangal, it is INR 53. In case of Yugal Suraksha, it is INR 58. And in case of Bal Jeevan Bima, it is INR 58 per 1,000 sum assured. Then we have a turnaround time. Now what is a turnaround time and how are in case of the different services which are being offered by PLI? The turnaround time limits for the PLI services. The first is a type of service and next is your maximum turnout time taken. In case of issue of acceptance letter or the policy bond of the insurance policy, it is 15 days after receiving the documents. In case of the payment of maturity claim, paid up value or the survival benefit is 15 days after receiving the documents. In case of payment of death claims, it is 30 days after receiving the documents, and if no investigation is involved, it is 90 days if the investigation is involved. In case of a revival or a conversion of the policy, it is 15 days after receiving the document. In case of taking a policy loan, the maximum turnaround time taken is 10 days after receiving the document. In case of changing the address in the policy documents, it is 5 days after receiving a request, and in case of changing the nomination under the policy, it is 10 days after receiving the request. Again, for the assignment of the policy, it is 10 days after receiving the request, and in case of the issuance of a duplicate policy bond, it is again 10 days after receiving the request. Now moving on to forms and documentation. The forms and the documentation under the Postal Life Insurance. The Postal Life Insurance proposed form is, this form is needed to propose a scheme of PLI insurance that wants to buy. In case of RPLI proposal form, this form is needed to propose a scheme of the rural postal life insurance that you want to buy. And in case of a maturity claim form, if your PLI policy matures, you would need to fill up this form and submit it to receive the maturity benefit of the policy. And in case of the loan application form, if you want to apply for a policy loan under any of the PLI insurance plan, you would need to fill out and submit this form. In case of a nomination form, this form would be required to appoint a nominee who can collect the death benefit of the PLI policy in case of your death, and you can also use the form to change an existing nominee under an existing PLI insurance scheme in case of a personal bond of indemnity. If you lose your original policy bond, you would have to fill up and submit this indemnity bond to get a duplicate policy. And in case of a revival application form, if your PLI policy has been lapsed due to non-payment of the premium and you want to revive the lapsed policy, this form would be needed for the revival. In case of a surrender value, this form would be needed if you want to surrender an existing PLI insurance policy and of course receive your particular surrender value. In case of AEA survival benefit form, so this particular form is applicable for Sumangal plan, which is an anticipated endowment assurance plan. So this form is needed to claim the money back benefit which is applicable under this particular policy. And in case of APS children policy proposal form, so this form needs to be filled and submitted if you want to buy the Bal Jeevan Bima policy, which is a children's policy. In case of APS PLI proposed form, this is a proposal form for buying the PLI. The children policy proposal form, this is for the proposal form for buying a child plan. And in case of CWA conversion plan, if you buy a Suvidha policy, which is a whole life convertible plan, you would need to fill out and submit this form. And if you want to convert your whole life plan to a particular endowment plan. In case of a death claim form, this particular form would have to be filled and submitted by the nominee or the legal heirs of the insured to claim the death benefit of the PLI policy. Now, what is the buying guide? These are the particulars for buying the insurance plan. The safety of the bond, keep it safe. The policy number, 13-digit unique policy number, keep it very, very handy. The premium payment, make timely payments, and online transaction, generate the customer ID and register your modules and mobile number. So your commitment and communication, the death updates your address and the phone number, and if there is a nomination form, you have to update that, and the lapse of the policy in case of a death premium are not paid, and in case of a renewal by the payment of the premiums. So this is how we have to go in on a website called www.postallifeinsurance.gov.in, choose buy the policy from the home page, and a new link would open. So fill up the form, select the mode of the premium and buy the policy. Thank you very much.